Good morning. We are here from the point where we had left the previous day, and now we are here to ascertain the claim made by this particular company in regard to the value, to ascertain the value of the stock destroyed. Now, mm, during 1989, 90, and 91, a trader made a uniform gross profit. This is the problem statement of 25% on cost, that is 20% on sales. Now, in 1992 was considered to be of the same prospect. On 25th of July 1992, a fire destroyed the godown and goods of the value of rupees 5,000 could only be salvaged. Now, the following particulars have been obtained from the records that could be saved. Now, stock on 1192 is 16,000. Purchases from 1192 to 25,792 is 98,000, and sales from 1192 to 25,792 is 1,15,000. Now here we are seeing that the problem has made stated that the gross profit of 25% on cost, that is 25 divided by 125 into 100, that is 20% on sales. Now if the problem statement had stated that it was 20% on sales, then it would be 20 by 80 into 100, that is 1 by 4 into 100, or 25% on cost. Now this is the way we calculate profit on cost from profit on sales, or profit on sales to profit on cost. Now we have this stock as on 25th July 92 as 24,000. We have the salvage value as 5,000, and we have a claim made by the company as 19,000. Now what we are here to do is we are here to check that the stock value of 24,000 made by the company, the claim, whether it is legitimate or not, whether it is correct or not, and less the salvage value, if any. Now we have the carriage inward, that is to be included in the trading account from 1192 to 25,792 as rupees 2,000. Now the carriage outward during that same period, that is from 1192 to 25,792 is 17. However, this generally is not included in the trading account and generally comes in the net profit, profit and loss account, the net profit portion. So we are not including this in the trading account portion now. And trade expenses is on 1192 to 25,792 as 300. We are here to ascertain the value of the stock by the fire for the purpose of submitting the insurance claim. Now, trade expenses also is not includable in the trading account, but is includable in the general profit and loss account. So we are here to exclude also this figure 300. So we are excluding two figures, that is 1,700 and 300 from the trading account, as it is not part of the trading account, but it is part of the net profit and loss account. Now we have the memorandum trading account. Why memorandum trading account? Why the term memorandum and not the trading account? Because the stock was destroyed, and this is the trading account that is prepared during the middle of the financial year, and this is not the end of the financial year. So this is a memorandum or a pro forma trading account. Now for the period of from January 192 to July 2592. Now this is only to ascertain the value of the closing stock. So you have to write memorandum trading account. Now to opening stock, as we can see from the problem, it is 16,000. As you can see. Now to purchases 98,000. This is from purchases 98,000. Now We have carriage inwards as 2000. You can see on top of the screen. Carriage inwards is 20,000. Buy sales 1,15,000. You have buy sales 1,15,000, and you have the gross profit portion. Now you have to here to calculate the closing stock. Now if you are here to calculate the closing stock, then you must have to first have to calculate the gross profit. Now gross profit is 25% on cost, so that it is 20% on sales. 25 divided by 125, and so we have 25 divided by 125, or 20% on sales, as 20% of 1,15,000, and it has been assumed that the profit is the same throughout the period. So 20% of 1,15,000 is 23,000. So the closing stock, as the balancing figure, is 24,000. So the claim made by the company as 24,000 is legitimate. Less salvage means 24,000 minus 5,000, 19,000 is actually the claim made by the company. When so this claim is legitimate, and that the closing stock amount is the same. Now, from the following balances extracted from the books of X and Company, prepare a trading and profit and loss account on 31st December 1991. Now, stock as on 1st January 11,000, bills receivables 4,500, purchases 39,000, wages 2,800, insurance 700, sundry debtors 30,000. There are some extra figures given also. Carriage inwards 800, commission debit figure 800, interest on capital is 700, stationery is 450, and returns inwards is 1,300. Stock, that is closing stock, is 25,000 because opening stock is given here. Returns inward is 500. Trade expenses is 200. Office fixtures is 1,000. Cash in hand is 500. Cash at bank is 4,750. Rent and taxes, it will be rent and taxes, resident as tent and taxes, is 1,100. Carriage outwards is 1,450. Sales is 60,000. Bills payable is 3,000, and creditors is 19,650. Now you have the figures to opening stock 11,000. Opening stock on 1st January 11,000. Closing stock is 25,000. You can see on top closing stock as 25,000. Now we have purchases 39,000, less returns outwards 500. We have the figure as 39,000 purchases, less returns as 500. Less returns outwards as 500. Just below the figure of 25,000 we have 500. So we have 39,000 minus 500, we have 38,500. Then we have carriage inwards as 800. That is, this figure is 800. Carriage inwards just below 30,000. We have sundry debtors, we have 800. Now to wages is 2,800. Wages just below the purchases figure, we have the figure of 2,800. Now then we have sales as 60,000, less returns inward, that is sales that were returned. Now we have returns inwards as 1,300, and we have sales as that is 60,000. Sales is 60,000 given on the right hand side, just over the bills payable 60,000. Less returns 1,300, that is 58,700. So we have the gross profit carried down is 30,700 as the balancing figure, and 83,700 as the total. Now we are here by the gross profit brought down, that is 30,600. Now you have the stationery as 450. We have the rent and the rates as 1,100. Now we also have the rent and stationery as 450. We have the stationery as 450. You can see from that figure. We have the rent and rates as 1,100. We have the rent and the rates as 1,100. It is given as tent and taxes, that is rent and rates. Now carriage outwards is 1,450. Carriage outwards is 1450. Now we also have insurance as 700. Insurance as 700. Then we also have the trade expenses as 200. We have the trade expenses as 200. Then we have the commission as 800. Then we have the commission as 800. Say the commission here is the debit figure 800. Then we have interest on capital as 700. Interest on capital is 700. We have the figure just below the commission amount. Interest on capital is 700. And then you have the net profit transfer to the capital account as the difference between these two figures. It's 25,200. We'll be practicing more problems. This is all for the day. Thank you.